Hello, we are Sales, Tax, and More. Today, we're concluding our three-part series on answering some FAQs about rates and sourcing. Question 1. Which rate should someone use when collecting tax? And do states and local jurisdictions have the same rates? State and local jurisdictions do not have the same rates. They will have different rates when it comes to collecting tax. When it comes to which rate you should use, it's going to depend on a couple of factors. First, you have to look at where that sale will be sourced. In other words, which state has the right to tax it. For tangible personal property, the sale will be sourced generally to where the customer or their representative takes possession of the item. If it's being shipped, especially by a common carrier, it's going to be the delivery address. Common carriers are not considered representatives of the customer. A common carrier is someone who's in the business of doing shipping, like a FedEx or a UPS. When the common carrier picks it up, it's still in transit. When the customer or the representative receives it, that's where that sale is going to be sourced. And where they're located is the rate that should be used. Additionally, whether or not you need to collect a local rate could depend on the state, city, county, or special district rates. Some states don't even have local rates. Whether those are going to be charged in addition to the state rate will depend on things like what type of tax you're registered for. Many things have to be considered when determining which rates to use. Question 2. What is the difference between origin-based and destination sourcing? Origin is based upon the location of the seller, while destination is based upon the location of the buyer or the buyer's representative. Most states use destination-based sourcing, but whenever something is crossing a state line, you're going to use destination-based sourcing. You cannot use origin-based sourcing if it's crossing a state line. Origin-based sourcing only deals with interstate sales that never leave the state and only have to do with figuring out which local rate to charge. Destination-based sourcing are interstate sales which do cross a state line. Those will be destination-based, and whether you charge a local rate or not will depend on what type of tax and what state it is. Question 3. Where are tangible personal property and digital property sourced? Are there any differences between how they are sourced? There are differences in how TPP and digital property are sourced. TPP is sourced based on where the seller or a representative of the seller takes possession. Services, on the other hand, aren't always based on taking possession. With services, it can depend on where the benefit is received, where the service is performed, or who the services are being done for. When it comes to the taxability of services, it's crucial to research how similar services were sourced in the past and assess from there. Digital property is different from services and tangible personal property. There tends to be a hierarchy of knowledge, which is an important term to know. This refers to different levels of information or understanding about digital property. If you are familiar with a concept, you'd use that specific rate. Nowadays, the most readily available information is often data collected during the transaction. For more information and other free resources, including webinars, blogs, and podcasts, or any questions, you can reach out to us at salestaxandmore.com.